will give a very concrete example. Until 10 years ago, we had BlackBerry, we had Nokia. They were companies that we thought would never go bankrupt, but now they are gone. How do we know whether a company will survive in the long term, and how do we invest?
When you become a partner in a company, of course it can go bankrupt. The best way to eliminate that risk is to understand that business. Otherwise, you have a higher chance of facing such risks.
Welcome to the new episode of Can't Ask. In this episode, our guest is Haydar Acun, and we will ask him about the stock market. Is the stock market a casino based on luck?
The Istanbul Stock Exchange is one of the biggest casinos in the world. The only difference is that there are buttons instead of slot machines. Jokes aside, for day traders, the stock market is indeed a casino.
What do you mean by day trading?
Those who say I should earn 3 to 5% today, buy or sell something. After all, shares can increase or decrease by 10% in a day. There are a lot of people who we call speculators, not investors, who buy in the morning, sell in the evening, or hold for 2-3 days to make a living or put some money aside. When you look at it like this, it's a casino. You can't predict which way the stock market will go, which stock will go up, etc. But a lot of people try this every day.
So can we say this? Is there a hormonal link between the stock market and gambling?
Yes. When you win something in the casino, you suddenly release serotonin and dopamine. It also creates addiction over time. When you win money, it actually creates a pleasure in the brain, just like short-term substance use. In the stock market, it is very easy to make money in the short term. When you make money in short term, it arouses the addiction center. So there is a lot of similarity. Because once you get a taste of that short-term, instant money making, it actually becomes an addictive and ongoing process. For this reason, this serotonin, dopamine, and the excitement it creates also lead people to buy and sell in the short term.
Is stock market a rich sport?
On the contrary, it's a poor sport. Because even those who have 100 liras can earn something in the stock market.
How should we invest in it?
In simple logic, how much money are we investing in that company? How much is the company worth? And how long can we get our money back? We need to look at this. There are such companies that if you wait 100 years, it is not possible to get back the money you invested. For example, when you put it in the bank, the risk-free return today, the return you will get by lying down and doing nothing, is maybe around 45%. When you are investing in a company, you need to think about whether it is possible to get more return in the long run.
When you are investing in a company, do you look at its growth or do you actually look at its value?
There is a distinction between growth and value investing, but it is not a correct distinction. Value actually includes growth. So if something is growing a lot, its value should be high accordingly. But there are 2 points of view. Yes, one is how much money will the company make, how quickly, and certainly can I get back the capital I invested. And the other one is, even if the company doesn't grow very much, what is the value of the assets within the company? Maybe it owns a lot of land, assets, or other valuables that can be sold. I was historically a bit more of a value-oriented investor. If I took over the company today and sold it, I would look at what would be left for me. But over time, I'm trying to evolve a little bit more towards how much the company can make, how much it can grow.
How reliable an investment tool is the stock market in Turkey's current economy?
The stock market is risky in the short term, but in the long term, it is a reliable investment tool. Because when you invest in companies that are making money, you protect yourself against economic ups and downs. You also protect yourself against inflation. Imagine a company that can increase the price of the products it sells above inflation. Nothing can actually protect you against economic crises as much as the return of a company that makes money.
I will give a very concrete example. Until 10 years ago, we had BlackBerry and Nokia in our lives. They were companies that we thought would never go bankrupt, but now they are gone. How do we know if a company will survive in the long term, and how do we invest?
That's a good question. Let me give an example from Turkey. There was a company called Rax Electronics in Turkey. It went bankrupt. There were Çukurova Electric and Kepez Electric. They went bankrupt. When you become a shareholder in a company, of course, there is a risk of that company going bankrupt. The best way to eliminate it is to understand the business and how the company makes money. You need to know what that company does. You need to examine its financials. Because when you invest in a business you don't understand, these risks are much higher. Peter Lynch, one of Fidelity's famous fund managers, says that even if you don't know anything, at least closely examine the products you use in daily life, the companies you like, and invest in them. Think about where you usually shop, which brand makes the products you use, or even what car you drive. Maybe you could consider investing in those companies. So, it's important to invest in what you understand.
There is a serious issue of misinformation right now. Everybody is giving stock market tips on social media. Which tip should we trust and how? Should we trust our instincts or look at the data?
We should not trust any tip. 99% of the tips you get on social media are wrong and misleading, because the people who make them usually take positions in these stocks first. Then they spread this and try to lure other investors in and then sell their own shares at high prices. You need to do this yourself. If you can't do it, give it to a fund manager. There are professional funds. Let that fund manager do this job.
So what kind of essential skills should I have as an investor in the stock market?
First, you need to know 4 operations. That's actually enough. In our business, you don't necessarily need to be trained. You need to be a little curious. You need to be familiar with numbers. Try to understand what the company does and look for information about it. For example, there is a site called capgov.tr. This is a public disclosure platform. All kinds of information about all companies are available on these sites. There are also financial information, important company news, and presentations. You need to understand the business and look at the basic data of the company.
This requires a serious amount of work, right?
Right. That's why not everyone should or can invest in the stock market. If you have the time, interest, and skills to devote to it, if you have some financial literacy, you can do it yourself. But if you are engaged in another profession, it may be difficult for you to spare time for this. By making time, I don't mean sitting in front of the screen every day for hours looking at this or that, but you need to take the time to learn a little bit about the companies, because investment is a long-term thing. When you buy something, you have to put it aside and wait for the long term, just like a land investment. If there has been a change in your initial ideas, you need to revise your investment decision.
Is it easy to 2x in the stock market?
It is. It's also easy to do 10x, but only with the right investment. There are shares that have increased 1,000 times. But the most dangerous thing is trying to get rich in the short term.
What's the difference between trader and investor?
A trader tries to make money by making a profit margin by making much shorter-term trades. An investor invests money and tries to earn something in the long run, like investing in land with low risk.
How do you evaluate small investors in Turkey?
Unfortunately, most of them act with the trader mentality or are directed to act like traders on social media. Speculation and trading are different from investing. Unfortunately, everyone thinks they are traders.
Could artificial intelligence replace stock market advisors in the near future?
There are no stock market advisors to be replaced by AI. This is a very big deficiency in Turkey. People have difficulty in accessing information about the stock market. That's why so many people are trying to watch or follow whatever they find on social media. There is a lack of investment consultancy and experts in Turkey. Maybe it would be very good for investors if such an institution is created, because Turkey needs this now.
Should an investment strategy be personalized?
Absolutely. It depends on how old you are, how much risk you can take, whether you can sleep well at night, all these things. So there is no one-size-fits-all investment advice. So we can't say something like, if you have 100 liras, put 50 into stocks, 20 into gold, and 30 into something else. This is a very general statement and does not suit anyone. It should be evaluated individually. A young person can take more risks. He can invest more in stocks. But an 80-year-old person may invest more in bonds or daily liquid funds. Therefore, how much you want to invest in the long term and your risk perception are also very important. Some people may not have the patience to lose even 1 lira. It is necessary to decide accordingly.
Is there such a thing as going bankrupt? Does that mean losing everything?
There is such a thing. If the company you buy goes bankrupt, your money is gone. Another way is by using borrowed money or trading with leverage. That can lead to losing everything very quickly. Other than that, it's hard to go bankrupt.
Can you give me a tip that's not investment advice?
You can buy funds, a stock fund. This is not investment advice.
Right now, there's a technology that's developing fast, and there are new companies, like OpenAI, for example. Is it safe to invest in these?
There is no such thing as safe. You can invest in any company, in any sector. A sector may do well, but the earning potential of the company is not very good. And there's no need to chase extraordinary things. You can also make money in boring companies.
Does technical analysis always tell us the truth?
Technical analysis never tells us the truth. Technical analysis is like driving a car by looking in the rearview mirror. They are trying to make inferences about the future by analyzing what has happened, but it doesn't work very well. It might only work in one case by giving you a clue by showing how the majority might behave. But investing is done by analyzing companies, not by looking at their share prices.
What did such powerful investors in the world like Warren Buffett or Charlie Munger do differently that made them such big names?
First of all, they are very intelligent people and they read a lot. We are talking about people who are in their 90s but read books 4 or 5 hours a day. Reading is something that grows and contributes with compound returns. What they do is to invest for the long term with patience and to analyze the business and the companies, not trying to analyze the stock.
What does that mean?
It means that when I buy shares in a company, when I become a partner of that company, I try to understand how much it can grow in the next 5-10 years, how much money it can make, and also to act contrary to the majority when necessary, that is, to leave the herd psychology, to think independently.
Do you also analyze the managers of companies?
I try to analyze them, but of course I am not always successful, because sometimes company managers can deceive you. They can explain their companies very well. The best way is to try to understand that company with the information we have by looking at the figures.
As a fund manager, do you go and meet the managers themselves in order to get to know the companies?
I go and meet the owners or managers of the companies. I ask them questions. I also go to their general assemblies. I tell them what I don't like. If I have objections, or if I have another idea about the company, if I have a suggestion on how it should be managed, I try to say them. I try to be a bit of an active investor in that regard.
So can you give us an example of a valuable source for being a good investor for our audience? Is there a certain resource you'd recommend reading to get a good understanding?
Ben Graham's The Intelligent Investor is one of the books that everyone who starts investing should read. It is the most important book to read in this literature. Other than that, there are various books on Warren Buffett, Charlie Munger. Reading in different disciplines outside of finance, that is, outside of economics, also gives you great skills. When you read history, for example, you can form clearer ideas about the future. That's why Charlie Munger has something he calls a mental model. In other words, reading books from various disciplines such as psychology, science, physics, mathematics, and history helps make a clearer investment decision.
As an investor, is there a sector in the stock market that you would say is the riskiest?
No, every sector can be risky, but technology can be more risky because it's not possible to predict. Let's say there is a company in tech and a new technology comes out, and the products of that company are no longer used. The dot-com bubble was like this. Many companies came out, and most of them went bankrupt. This risk is less in the companies we call the existing old economy.
Sometimes we see that a company has a known value, yet in the stock market, its price goes up 50 to 100 times more than that. How does this happen?
This is due to human psychology. The stock market is a market, a place where a lot of people come together and reflect their day-to-day psychology. And in general, the movements in the stock market are like a pendulum swinging back and forth between greed and fear. Sometimes you see a great greed, and companies can be worth 50 times or 100 times what they are worth. Sometimes the stock market can be dominated by fears. For various reasons, it could be economic or political. It could be a conjunctural event in the world. Companies can be worth 1/10 of what they are worth. As long as there is the human factor, we will always see these value differences. Anyway, the duty of the investor is not to get caught up in this. It's important to think independently about what that company does and not to get caught up in herd psychology.
So, as an investor, can you tell us how you uncover the real value of a company you want to invest?
I look at two things. If I bought the company and shut it down the next day, how much money would I get by selling everything? I look at how much property, stock, land, receivables, or money it has. Secondly, I look at in how many years I can get back the money I invested. If I invested that money in a risk-free investment, for example, in the bank, how much income can I get? I look at how much profit I can make by becoming a partner.
Are these on the site you mentioned?
No. Here's how we look at it. The company's information, the audit report, shows the company's assets. For example, how much land does the company own? The buildings, vehicles, and factories they own are on their balance sheet. For example, they valued a land 5 liras. Maybe a place similar to that land is for sale, maybe 100 liras in value. Then we say that the real value of this land is 100 liras, not 5 liras. But in the official figures, it is 5 liras.
Can investors actually intervene in the investments of the company they invest in?
They can't. In fact, one of our biggest handicaps is that you can be a partner in that company as much as you want. If you haven't taken control of the company, for example, by having shares that allow you to determine the board of directors, even if you own 80% of the company, you might not be able to do anything. You can go to the General Assembly and say whatever you want, but how much they will take you into consideration is a question mark. For example, if you become a shareholder in a certain percentage of a company abroad, you have a chance to enter the board of directors, and then you have a chance to have a say in the management of the company. But here, you don't have such a chance.
In your 30-year stock market career, what was the biggest mistake you don't want to remember?
I have two big mistakes. One is the mistake I made after I started fund management, and I made the other one while working at a brokerage house. The one at the brokerage house was actually not my mistake. It was someone else's mistake. But the consequences almost cost me. One day, a foreign investor gave me a sell order for a $6 million stock. The investor told me after the session closed that we sold the wrong stock. He said, "I told you the wrong stock." I was so stressed. I went home, and I don't know how I slept until the morning. Fortunately, I bought it with a very small difference, but the biggest stress I experienced was when I was working at the brokerage house. The biggest mistake I made after I started managing funds is my own fault. In 2017, the market system has changed. I thought that switching from a parliamentary system to a presidential one would increase political risks, leading foreign investors to pull out of Turkey. So I tried to short the stock index based on that assumption. The opposite of my expectation happened. I experienced the stress of this all year long. So I try not to repeat that mistake.
What are your expectations for 2024 stock market?
You can't ask that. No one knows the answer. The richest person in the world would be the one who knew where the stock market would go. Nowadays, a lot of people are trying to predict, but no one can do that.
In this episode, our guest was Haydar Ajun. If there are different guests you would like to see, different questions you would like to ask, please don't forget to write in the comments and turn on your notifications to be informed about our new videos. See you in the next video.